Can you tell us what questions you can ask?
Okay, everyone can see my screen? All right, perfect. All right, let's go ahead and get started. Thank you everyone for joining. Let's start with a couple of quick housekeeping notes, and then we will get into the details of our conversation. Just make sure we're recording. Yep, perfect. Okay, so let's see. Number one, we are recording this event, so just so you are all aware, we're going to be recording it, and then this content will be posted on business911.org. Just in case you haven't had a chance to look at that platform, it's basically business911.org. You go to Grow Missouri, there's the platform. There's some interesting and free capabilities here. If you want to post local jobs, you can do that, especially for our employers, as in potential employees looking for jobs. Any educators in the room, feel free to click on this sort of jobs database. You can go in here and look at your respective community, look and see how many jobs are open. You can see across our 5 Grow communities how many jobs are open, types and flavors of jobs. You can look at it by individual community. So if I'm in Salem, I can click on Salem and see 50 jobs open right now, and different profiles there. And the other thing there's other functionality here as well, but the one I really want to highlight is the educational series. So after each one of our events, we have the educational, the recording from the event posted here. So in the future, you can take a look if there's something that you liked, and if you want to revisit it, or if you want to share it with others, you can do that as well. So in 3 to 4 days, this event today will also be recorded and placed on this site. So just wanted you to have that context. Okay, good. So that's the first thing. We're being recorded. Second is in front of you, you should have a handful of materials. Yep. So in front of you, you should have a handful of materials, a survey sheet. As we're going through it, if you see anything that you like particularly, or something that doesn't work for you, do let us know. We keenly look for your feedback. And also let us know how we did. Was today's session helpful to you? If there's anything else we can do to make it more impactful, let us know that. Any other topics that you think could be helpful, let us know that as well. And then alongside the survey, you should also have a handful of maybe 1 or 2 documents that are a summary of our conversation today. All right, so having said that, we have, I can see we have 3 communities on the call today. We have the Salem team, Buffalo team, and Marshfield team. We were supposed to have Aurora as well. I'm not sure. They may have run into some issue, but we will proceed forward. So my name is Rishu Mahalha. I am here. Sorry, one sec. My name is Rishu Mahalha. I am. Let me just provide some brief context of who I am and why today's conversation I'm incredibly excited to share with you about. So I am an economic advisor. I've been in management consulting, helping sort of corporate companies. I've also consulted and advised small businesses on what they could be doing to think about sustainability, profitability, how to drive up their profits, manage their costs. So I've worked with many small business owners. I've also been a small business owner myself. At one point in my life, I used to own a restaurant, and that was a lot of fun. I've shared some of my stories with some of you. If those of you who have not owned a restaurant, that's something that everyone should do once in their life. That's if you feel like you don't like making hair in the morning, after you run the restaurant, you'll be like me. It's one less thing to worry about in the mornings. As a joke. So that's it. That's my one joke for today, and I've used it, and I got 0 laughs. So I'm okay with that. And I share that the experience as a small business owner because it very much ties to our conversation today. I have a fair amount of experience consulting and advising others. I have a fair amount of experience looking at financials and how to run businesses. But I have to tell you, when I opened up my own business, we were a financial disaster. And I just, frankly, it was because I just always felt like I was behind the 8 ball trying to catch up. And there just weren't enough hours in the day, and there was too many other things that needed my attention. So I just kind of naturally looked at the things that I was decent at, and not paying as much attention to our financials. So that's what we're going to talk about today. So let me share my screen with you. We're going to talk about profitability. So it was during the time when I was actually guiding some of my small business clients on this realm of business sustainability and profitability that I was looking for a better tool. I noticed this pattern among small business owners, and I thought for a long time it was just me. I was just a slacker, or I wasn't paying enough attention to how to run my business. But it turned out that I found more the case that small business owners just hated dealing with financials of their business. And because I saw such a strong pattern, I kind of wanted to find a tool or a framework that I thought could be helpful for small business owners to think about financials differently. And thankfully, I believe that God winks. It kind of gives you a hint on what patterns to follow. So I just happened to find this particular book in my local library. I got an audiobook out. I listened to it. I found it to be an incredibly entertaining, insightful, practical guide. And since then I've applied it to my own business. I am a small business owner now as well. And it's been incredibly relieving. So I've gotten a lot out of it. And I think that hopefully some of the small business owners, you will find it helpful as well. One more caveat I want to add is, this is not just for small business owners. If you're in nonprofit, if you're in government, there are elements of this conversation that are relevant to you as well. So with that, we'll jump in. This is a book. It's called Profit First by Michael Michalowicz. And so let's begin. My hope, by the way, by the time we finish this conversation, is to give you a set of very simple and practical tips that you can take back to your business. So in about 45 minutes to 50 minutes, I want to make sure that you end up with 2 or 3 ideas that you can apply in your business. It's not too big and complex that it feels intimidating. Hopefully it's simple enough that it can help you shift your thinking. Okay, so that's our goal today, and we'll save some time for a Q&A at the end as well. Okay, so let's begin. Raise your hand if you love budgeting. Let me see. Who loves budgeting? Yes. I see one hand. Budgeting isn't something that generally people are enthusiastic about, especially small business owners. Many of us sort of got into the business because we kind of liked an industry, or we liked a certain service, something we like to do. And fortunately, the budgeting piece is something. It's sort of the burden that we must bear in order to run the business. So what we're talking about here is, one sec, hold on. So what we want to talk about is, how do we think about budgeting in a way that sort of aligns with how humans think. And what I found is, again, this goes back to my experience of working with a lot of small business owners, is many business owners just don't like getting into the nuts and bolts of the numbers and there's a few different reasons for it. One, if you're a small business owner, there are a few small businesses that are just sort of financially kicking butt. There are more businesses that are at the edge. They kind of have a good month, and then they have a mediocre month and a bad month. So thinking about financials generally is stressful. It's emotionally stressful to look at numbers. Secondly, generally people, I find, aren't as number oriented, generally speaking. So It's, again, from an intellectual perspective, it's not fun. From an emotional perspective, it can be jarring. And then it requires a certain amount of discipline, which, again, some of us struggle with. So we know budgeting is hard. And unfortunately, the way we come at it, we sort of set it up where we say, if you want to run a strong business, you kind of have to follow a set of principles. And generally, in the accounting tax world, we call it GAAP, generally accepted accounting principles, which are sort of technically the right things to think about. But from a sort of, if you look at the perfect idea, and then there's us, the humans, trying to adapt our behaviors to this ideal thing, it sometimes doesn't connect. So if you look at GAAP, basically the theory behind GAAP is this. If you're looking to run a business, and if you're trying to figure out, hey, is this a viable business or not? Well, the math is simple. You look at your total sales, you look and see how much did we sell, and then you look and see, well, what were my total expenses in running the business? And then at the end of the day, lo and behold, if there's money left over, congratulations, you made money. You have a profitable business. So what breaks down in this theory? Everything makes sense. This is something that I don't think anyone here can argue with, but where is the rub? The rub is, if you're a small business owner and you're kind of living sort of one sale, one invoice, one purchase order, one accounts receivable at a time, too often that profit thing ends up being sort of a wishful thinking. It's out there, we want it, but you know what, we're going to think about tomorrow because today I just got to survive. And this was very much my mentality as I was running the business was, okay, while it's great, I want to be profitable, let me hold off till tomorrow. And unfortunately, at the end of the day, that particular business that I was running, it didn't work. We went belly up because frankly, we just didn't make it a financially sound business. So, one of the theories that the book talks about is this thing called Parkinson's law. And what Parkinson's law doesn't have anything to do with the disease. It really has to do with this human tendency, which is the effort will fill whatever time you give it. If I have to do a book report and if I have 2 hours to do it, it'll take me 2 hours to do it. If I have a book report and then I have 3 months to do it, guess what? I'm going to stretch it out for 3 months. So we have this tendency to sort of fill whatever space is given to us. That theory is applicable to the world of profitability because when we have money, when we have sales, and when we feel like we have a little bit of extra cushion, somehow, unless you're being very diligent, our money will end up getting sucked into activities, investments, capital, running our business that we may or may not absolutely need. So the question is, how do we think about our money in a way that our expenses, especially the expenses portion of our business, can be constrained? Okay? So Parkinson's law, that's the concept that we're going to see if we can somehow take our human brain and sort of recalibrate it so that we can take a natural human tendency and run a business in a way that helps us tackle that tendency. Okay, so that's Parkinson's law. So there was a study done, and if you've sort of noticed the pattern of our eating habits in America, what you may notice is that over time, our plate sizes have slowly gotten bigger. And as a matter of fact, just 2 weeks ago, I was in India. I had a chance to go there for a handful of things. And while I was there, I ordered a cup of coffee, and they gave it to me, and the cup of coffee was smaller than my hand. And so when we live in the US and we're kind of used to a coffee that comes in this size is a small, and that's a medium, and that's a large, I was like, wait, what? I have to order 5 coffees just to get my normal fix of caffeine. Well, it turned out, I was like, yeah, I'm going to order 3 of those. But after 2, I was like, okay, I'm kind of done. I've done 2, that's enough. Well, that was literally half the size, if not a quarter size of our normal, quote, American coffee. So the theory there is, again, Parkinson's law. You make something big, we're going to fill it up. You go to eat, and there's large plates at the buffet, we're going to fill it up. So how can we create natural constraints so that we don't have to expend our time, our energy, our money in areas where it may not be most conducive? All right, so that's what we're talking about. How do we do that? And is there a way for us to run our business using that mentality? So it's sort of the first rule to think about. Let's not change our habits. Let's find business process. Let's think of a framework that allows us to do the things that us as humans are naturally not good at, and use that attitude to help us. That's what we're talking about. So how do we do that? Let's flip them up. So what Michael Michalowicz says is, flip the equation around. Instead of waiting till the end of the day to figure out if you made profits, notice how this equation changed. One very simple change. Initially, it was sales minus expenses equals profit. We just moved profit and expenses came here. For those of you who remember your algebra class, you can move this, and that's still, the equation is still stable. It's still the same equation. We just kind of switched it around a little bit. Sales minus profit equals expenses. We're prioritizing profit. We're anchoring on profit. We're saying we have to make a profit. A business lives to serve its owners and its constituents. If it's not doing that, you're running a charitable institution, which is fine. There's nothing wrong with charitable institutions. It's just that if you're not making a profit on an ongoing basis, whatever the appropriate profit is for your business, your industry, you're not going to be able to survive to see tomorrow. Okay? So this is what Michael recommends, is think about prioritizing profits. So how do we do that? Is there a way we could do it? So again, his rule number 2, don't think about profits as the last thing. When I was running my restaurant and I was unfortunately not doing well, I just kept putting myself in this mindset of, okay, I'm going to make my money tomorrow. Let me survive today. Let me just make sure my expenses are paid. And then I know I'm just setting up a strong foundation. So tomorrow, I know I'm going to make a huge profit. Unfortunately, that tomorrow never came. Michael says, prioritize profits, anchor on profits, no matter how big or small, how early in the business you are or how late in the business. Think about how you can be profitable from day one. Okay, so we'll keep going. That was rule number 2. Now, some of you, like me, may think, well, I don't have enough sales. There's not enough sales. There's too much fluctuation. There's just not enough to make my business profitable. This all sounds good in theory, but you know what? I'm a unique business. Well, I'm just using Michael's words here and his analogies. One of the analogies he uses is this analogy right here. How many of you have had this sort of a thing happen in your bathroom, where you thought you're gonna go buy that toothpaste when you're running low, and you forget, and then you forget again, and then before you know it, that tube of toothpaste has been rolled, and you're squeezing it, and somehow you can just sort of make that tube of toothpaste last another 3 days. And when you think still when you're done, you can get one more day or one more brushing out of it. And that's sort of the point that Michael is making in his book, is forcing yourself to be that methodical, that diligent about where can I be saving money? Where can I be squeezing profits out? And the reality is every one of our businesses, there's a potential to be more profitable if we were more diligent. But it won't just happen in sort of a natural mindset. Now, what happens when you're running and most of the folks here, either you run a small business or you have a nonprofit, all of you have a bank balance. Maybe it's a business bank balance, or maybe it's your personal balance. There's a balance. There's a number that you look at and says you have $3,000, you have $4,000, $7,000 in there, whatever the number is. The problem is When we look at that number as a business owner, we have no idea what that number really means. Is that $7,000 amount of money I can spend on buying a table, a chair, a new iPhone? Or is that money already spent? I've already bought services, I already bought materials, I have a credit card due. I have a subcontractor that's done the work and I have to write a check to that subcontractor. But when I look at my bank balance, I see $3,000 or $7,000. That may give me a sense of comfort, but I also have this nagging feeling that I know that entire $7,000 isn't my money. Some of that money has already been called for because I have committed vendors to do stuff for me. And this is the point that Michael's getting after. Change the way you look at money, take specific steps, and then you'll be able to take much more diligent steps to become profitable. All right? So that's what we're talking about. How do we squeeze that extra penny out of every ounce of our effort? Okay. So this is what we talked about. Old way, we take our existing operating account, money comes in, it sits in our checking account, we pay expenses out of it, and then at the end of the day, and the year, end of the month, whatever's left over, that's what we call profit. But as the year is going, we really don't know if we're being profitable or not. What he's saying is, flip it around. Think about profit first. When everything else is done, then look at your expenses and understand how you need to manage your business so that you can continue to be profitable. It's a very, very minor, but a very powerful shift. Profit first. What's left over is your expense bucket. And guess what? At the end of the day, if you have $200 worth of expenses left and you do your whole math and it turns out you only have $10 left in your account, that means you don't have a viable business that month. You've got to do something to change the math behind your business. And rather than having to wait till the end of the year when the accountant looks at your business and says, well, hold on, we got a problem here, you could be having much better pulse on the state of your business every 2 weeks, every month. You'll know how you're doing. When I ran my restaurant, I had no idea. I just didn't know. I just knew I had a pot of money. There was a bunch of money sitting in. I had a bunch of money going out because I had to buy chicken and salad and this and that, and I had to pay people. And sometimes that money got really, really skinny, and I knew I had to take some dramatic steps. I had to pull money from somewhere else. So that's what we're talking about. Okay, we'll keep going. So how does the system work? Let's get into the nuts and bolts. This plan is pretty simple. What we're talking about, can I see a show of hands? How many of you are familiar with the envelope system? Envelope system, 2, 3, 4, 5. Okay, most of you, good. That's what we're talking about. Michael is recommending that we put our business on an envelope system. We pre-designate, if I have a big chunk of cash, I pre-designate dollars into different buckets. So I know how much my budget is, and then I live according to that, whatever's in that envelope. If there's enough money in the envelope, I get to do my thing. If there's not enough money in the envelope, you can't do your thing. Make sense? So that's what, at a very fundamental level, that's the best analogy. We're talking about a very constrained, methodical, a proactive system. This is not about waiting till the end of the month to now have to pay the bills and see if there's anything left and pay my taxes and see if there's anything left. This is about getting ahead today. So how does it work? Here we go. So let's use this as an example. We have Peter's wife's cookie store, okay? This business, this week, let's just use nice, simple, round numbers. So I'll explain this conceptually, and then we'll dig into it deeper and deeper. This business has $100 of sales this week. They sell a bunch of chocolate chip cookies and macadamia nut cookies and raisin nut cookies, whatever, right? $100 worth of sales. Typically, if you're taking a business class, or if you're writing business plans, or if you're using GAAP principles, The next thing people will tell you to do is, all right, what were your expenses? Michael is saying, forget that. Doesn't work. Change the way you think about your business. If your total sales are 100, think about what profit you want to be driving in your business. So the next thing we do is we think about our profits. What percentage profit should you have? And he's got some really great tools. I would encourage you to Google the word profit first. Michael Michalowicz's book will come. By the way, hey guys, just so you know, I don't get paid or anything, okay, for this book. I just love the book and I think it's really powerful. So go use it. He's got some really great free stuff on his website too that can be really great templates for you. So what he says is, for every industry, there's some sort of a profit benchmark. If you're a restaurant, I think the profit numbers are roughly 7-8%, net profits that you should be making. Different industries have different profit levels. If you look at your history, you'll get a sense for, what's a reasonable profit amount. So he says, think about what your profit goal should be, and right away, take that money out. So in this case, we said in the world of cookie, gourmet, desserts world, there should be 15% profit that we make. So we're going to take $15 out. Great. Now what? Now we look at our cost of goods. Cost of goods basically says everything that went directly into that cookie. Flour, sugar, utilities related to the electricity bill to run that oven, right? The macadamia nuts, the chocolate chip, all that stuff. Look at every single cost that was required in baking that cookie. In this case, we're saying, it costs us $40 to run for our stuff that went directly into that cookie. Good. Now he says, now look at your gross profits. Now, given this, our gross profit is $60, right? Let's say we sold 100 cookies for $1 each. We made $100. It really costs us 40 cents for every cookie we sell. So we made, in essence, $60 for this week. Now he says, don't forget about your profit. You have to make $15 of profit. So you take $15 out of the $60, and what's remaining, wait, my math is wrong here. This should be 35, sorry. This overhead should be 35. That's incorrect. So 30, was that right? 35, 40, 25. I'm sorry. I'm going to fix that right now because that's embarrassing. Hold on. Boom, boom. Sorry about that. Look at that. Look how quickly we can fix that. There you go. That's better, right? 30, 40, 50. Perfect. So now he says, this allows you to think about what your overhead flexibility is. What this means is, if you're thinking about putting a new sign in front of the store, you're thinking of buying that new oven, if you're thinking about investing and cleaning the floors or whatever it is, know that you're working with constraints. And rather than thinking about profits as an afterthought, we're saying that you better make your profit, and at the end of the day, then figure out how to deliver that kind of, that kind of a business model. So that's what we're talking about. Okay. In the book, on the website, he also gives several examples. So what he says is, these are rough. So in the previous slide, you saw sort of different categories. He goes as far as saying, if you have different businesses with different kinds of sales that you have, here's some sample percentages that you should be thinking about in terms of allocations. Now, you can use these as allocations, or you can look at your history and see what's the reasonable allocation amount for your business, and based on that, make your allocations work. So, and he calls this target allocation percentages. So as I'm thinking about my business, my total sales, my cost of goods, my overhead expenses, my profits, I can sort of see how to think about those different categories. And he's giving us some guidance on how to think about how much money we can allocate where. So this can hopefully help you see if the numbers you're thinking are reasonable or not. So now let's get into the weeds. how would the system work? This is what he says. And by the way, hopefully some of you find this conversation interesting and helpful. By the way, I am not I should put myself on big screen when I say this one second. I am not an accountant. I am not a financial advisor. I'm coming at this conversation from a very sort of business management perspective. So I would highly recommend that step one, if you like what we're talking about, go get the book, read the book, see how you can apply some of those principles to your business, and then have a conversation with your accountant. Then figure out how to make the tweaks in your business. And in the book, he also talks a lot about sort of how to get started. But I wanted to put that caveat out there. All right, so let's look at how we make all of this happen. We're going to create, in essence, our envelopes. So what does that look like? What he says is, first step, create a set of accounts, dedicated checking and savings accounts. What are those accounts? He talks about 5 unique accounts. 3 are checking and 2 are savings. You have your income account. This is where every one of your receivables comes into it, right? That's bank account 1 right here. Second is your profits account. We're taking profits out right away. Third is your taxes account. Uncle Sam will come after that taxes. You better be putting your tax money aside, because regardless of what happens, you got to pay certain taxes. If you're in retail sales, you've got to pay whatever sales taxes that you collected, you got to pay them. So make sure you're setting all that money aside. Fourth bucket, which is a checking account, is an owner's pay. So this is how I pay myself. Fifth is operating expenses. So this is, again, going back to our cookie model. The last thing that we looked at is, okay, everything paid up, how much money is left, and can I make my expenses using the amount of money that I'd allocated, right? So we're setting up our 5 accounts. Next step, establish your target allocation percentages. So this is basically saying, if I get $100 in cookie sales, how much money am I going to allocate to each one of these buckets? And you saw in the previous slide, he gave us some hints. If you have business of that feels and looks of this size, then here's how you may want to be thinking about it. So you establish your target allocation budgets. In this case, we're saying, okay, 15% in profit, we want to save 15% taxes that we want to put aside. I want to pay myself 30%, and I want to be running basically, sort of 60% gross profit margin. So 40% I'm putting towards any expenses. Okay, so I've got my allocations. I've got my checking account set up, my envelopes. I know how much money I'm going to allocate where. Next, when money comes, when a client pays you, when you make that cookie sale, if you're a chamber and you're getting money from your members, when you get that money, all that money goes into your bank account, your income account. So all that money goes into our account. It sits here. This is the big pool. This is the account that we kind of come to love and hate. There's a number of amount of money in there. We just sometimes can't tell what the money is allocated to. So the money comes in, we let it sit there. Next, on the 10th and 25th of every month, we move our money to these respective accounts. We set basically a schedule. Twice a month, every month, we move the money. And when we move the money, basically we bring the account balance in this account to 0. All right? So all of our money moves out. How do we move it out? Well, based on our allocation accounts. So we've set up our target allocations already. Whatever money comes in, we just move it. So let's use an example and see what that looks like. So let's say we are making in our business $1,000 a week, $2,000 every 2 weeks, or $4,000 a month. Twice a week, we're making our allocations, right? So in essence, we have $2,000 that we've gotten. Now we're going to take that $2,000, we take 15% of that, we move $300 to our profits account, $300 to our taxes account, $600 to our owner's pay, and 40% to our operating expense. And we've allocated all those dollars. And now we know at any given time what our picture looks like. When we have that invoice comes in from our vendor, they want to be paid, I can look and see how much money I've set aside for my expenses. Now, this is, again, I'm giving you an abbreviated version of what Michael says. He's not married to these allocation amounts. You can change this based on your business. You may not feel as comfortable having these percentages. Maybe you want to use different set. Use the percentages that make sense for your business. Michael has a lot to say on this topic, but certainly you can use this as a starting point. Okay, so we've done this, and we've sort of put our money aside. Now, rule number 3, good process eases discipline. When you're running a business and we have to deal with money and the emotional challenge sometimes of running a business and staying disciplined, it's tough. And the more flexibility we give ourselves, sometimes it's harder to be disciplined. So his rule number 3 is, you know what, if you want to be disciplined, if you want to make money, if you want to be really paying attention to where you're spending your money, set up a good and a simple process for you. And if you do that, it will make your life easier. You will become more disciplined. Okay. So some of you may be wondering, okay, well, all that's fine and good, but you know, we do all that, and it turns out that I don't have enough money left over in my expenses. I can't really afford to pay myself. I can't really afford to have a profitability bucket. And this is where he makes a really interesting point. And I'd never quite thought of it this way. And I think just sort of from a framing perspective, I want you to just think about sort of how you may be able to apply this concept. Here's what he says. You have customers. When you're thinking about where to spend your money, and this applies, I'm looking at people in the audience right now that are city administrators, economic developers, chamber leaders, business owners with banks. Doesn't matter who you are, you should be spending money only in 2 areas. He's simplifying it to 2 areas. Number 1, where you spend your money is in attracting customers. How do you get your customers? Spend money in getting new customers. Number 2, where you spend your money is in keeping your customers. Now, those are broad buckets. Underneath it, there's a lot of different stuff. But at the end, this is a good litmus test. If the money you're spending on, if it doesn't help you directly get new customers, I'm looking at Ray, who's a city administrator in Salem. You're running a city, a town, and you have to spend money, you have to make budget allocation decisions. At the end of the day, it's about your citizens. If the money you're spending isn't helping attract new, young families to your community, or ensuring that those families that are here stay here, you got to think about how we're spending our money. Or we may tweak the way we spend our money so that the money spent more directly helps us accomplish these goals. Get new customers, keep existing customers. That's it. All right, so that's a great little litmus test to think about. At the end of the day, your job is to find ways to continually increase your revenues and reduce your cost. Increase revenues, decrease cost. The greater that variance, that my eyes, this gap right here, that's profit. That's your job. Focus on, and this system, because it's so proactive and it puts things in the right categories, it's simple, it helps you really look at that picture of, is this profitable goal realistic for me or not? And by the way, I keep using the word profit. It's both profit and your compensation. There's too many. When I was helping small business owners, one of the things I found is how many small business owners are working for free. They're not paying themselves even close to what time they spend. So we're talking about both profit and owner's compensation. The more we can reduce our costs, increase our revenue, we can afford to take money out for ourselves in terms of pay and have a little bit of extra profit left at the end of the day. Here's his 4th lesson. I never got this when I ran my business, which is you can never grow yourself into profits. This was probably, of all the mistakes I made, this was the number 1 problem I had. I said, today I'm going to focus on surviving. Tomorrow I'm going to focus on thriving. I just got to survive today. I got to make my I got to make sure my lunch is successful, my catering order works. Tomorrow, I'm going to make sure that we are profitable. And the point he makes is, unless your business works for a small set of customers, small amount of revenue, if you can make the economic model work, the probability that you can make it work with 10 times the amount of sales is probably unlikely. Now, probably unlikely because, yes, there are business models. Tesla, large business, never had turned a profit, and all of a sudden now it's starting to churn cash, right? So there are businesses where that does work for, but it is highly, highly unlikely that you can grow yourself into profitability. You're much better off having organic growth, being profitable every day, and making those disciplined choices every day so you're investing in the right areas. So he talks a little bit about distributing profits also. So this is an interesting thought, and I kind of like this also. So as you can notice, we're sort of accumulating money in each of our buckets. And then what you're doing is you're distributing the money out of those buckets into the respective accounts. So you have an operating expense account. As your invoices come in, you're paying yourself off. In this particular one, your profits, here's what he has to say. So in this case, we said you're putting aside $300 every week, $600 every month. He says once a quarter, at the end of the quarter, let's say if everything works well, our business is working okay, I'm able to put aside this money on a bi-weekly basis. You don't touch that money until the end of the quarter. At that time, you take a distribution. And what he's guiding you to do is take 50% of the money and put it in your own personal bank account and have fun with that money. Spend it on something you like. Buy a gift for someone. Buy your family something. Buy yourself something nice. Do not invest that money into the business. This is your reward. Have fun with this money. Learn to enjoy sort of the fruits of your labor and learn to apply those fruits not just to yourself, to your community, to your family, to your friends. The remaining 50% you keep in that account. You let your profit nest grow. At the end of the year, then, you can make allocations based on if you have retirement, et cetera, et cetera. You can make decisions that are tax conducive on what to do with the money. But once a quarter, you have some fun. And hopefully there's, and again, he used a lot of anecdotes in his book. And he also, he says, it's not about whether that's $900 or $9.09. Get in the habit of having something left over that you can take out and say, this is my profit. I'm going to buy myself a sundae with it, but get in the habit of experiencing your business being a profitable entity. Our small business owners, frankly, just don't understand what this feeling is all about. They have very, very rarely made a profit. I'm making a broad, exaggerated conclusion and a statement. I know that, but I was frankly, I was shocked as I was helping many of the small business owners. I had to, is probably 1 to 2 out of 10 businesses that was actually making a profit. 8 to 9 businesses that I work with was not making a profit, was significant. The owners were significantly subsidizing their business because they weren't really paying themselves market wages either. Okay, so that's what he's saying. Think about profit, have fun, get in the emotional habit of enjoying the profitability. The second thing he highlights is the salary. What do we do with our salary? How do you determine your salary? So the way he says is, articulates this, he says, think about what you do 80% of the time. We may do things that are really, really important or not that important, but think really about the 80% of the time what you do. And if you had to pay someone else to do that work, how much would you pay them? That is your salary, right? Now, you may not think that you can afford to pay yourself that. That's okay, but still know what that number is, because you can at least know what the right benchmark is of how much you pay yourself. So we set aside, this is sort of a framework on how we identify how much money to put aside for ourselves. And then he says something really profound. He says, if you don't have enough money in your account, you don't get paid. That's it. And the reason he's saying that is because he's trying to inflict pain on us at the time that the pain should be inflicted. Now it's kind of like, let's say I hurt my hand and I can't feel, my nerve receptors on my fingers don't work as well. And I'm doing something, I'm cooking one day and I sort of pick up a hot pot. And because my nerve receptors aren't working as well, I pick it up and I don't realize that my hand sort of is burning, and then I put it down, whatever, I do things, never realizing that I've hurt my hand even more now. Because the feedback loop isn't there. And what he's talking about is create a feedback loop that creates immediate pain for you. Because you'll know, oh boy, I got to do something different. Something's not working. I've got to change. I've got to figure out how to get that 2 extra sales, or I've got to figure out how to drive down my costs. So let's look at an example on how this works. So here we go. So say, sort of going along in this example, let's say, every 2 weeks, I'm getting sort of this $10,000. First week, I've got a bunch of sales that happened. I got $10,000 that came in my accounts receivable. And I've said 30% going towards my owner's pay. So I take 30% of $10,000, $3,000 is going to be my owner's pay. So I'm going to take this money and I'm going to put it into my owner's pay checking account, and I take a distribution. In this case, I should have really started. I should start here. So I started by saying, based on what I set up here, on my salary, I'm saying I want to be paid $2,000 every 2 weeks. That's the benchmark that I want to be paid. So this first 2 weeks, I got $3,000 set into my account. Of this, I'm going to take $2,000 and put it into my own personal account. This is my money I'm being paid salary for. The other $1,000 stays in my owner's compensation checking account. All right. So I got that. Started with 10,000. We distributed 3,000 towards my owner's pay bucket. Of that, I took 2,000 out, thousands left over. Now next month, right? Because we don't have a consistent fluctuant business. Sometimes we have high sales, sometimes our sales go down. Next 2 weeks, we don't have such a good 2 weeks. So we only get $3,000 in income. I take 30% of the $3,000, $900, and I now put $900 into my owner's compensation checking account. So now what happens? So I had $1,000 from before, and now I have $1,900 and more that came in. So now I have $1,900 sitting in my bank, in my owner's compensation bank balance. So what do? Do I take a distribution? The answer is no, I don't. I have said that unless there's $2,000 in this account, I will not take a distribution. So I am not getting paid this month. And the $1,900 continues to sit in my account. Then month 3 comes along. All of a sudden, my revenue jumps up a little bit. I take 30% again of that. I've got $1,800 that come into my account. So now I have $1,800 plus $1,900. That's $3,700. Now I have enough to take a distribution out, so I take $2,000 out again, and now I'm down to $1,700 in my account. Why did we do this? We created an immediate feedback loop that hurts us directly, right away. So we know that we have to do something different in the next 2 weeks. It's not about profits next year and 6 months. It's about, I better figure out how to get some more profits in the next 2 weeks, because otherwise I'm not going to get paid. All right, so that's the concept that he's talking about. So I just used, this is my own words. I just said, create instant karma. Karma is, you do something and something happens back to us. So this is all about creating that instant feedback loop. So we're sort of wrapping our conversation up now. Just to recap, our 5 major rules that Michael's highlighting. 1, don't try to change habits. It's sometimes too hard. Try to figure out a way to navigate around them. 2, prioritize profits. Unless you're making a profit, your business is going to have a difficult time sustaining itself in the long run. Third is a good process eases discipline. We all want to be more disciplined. We want to eat better. We want to exercise. We want to sleep early, wake up early. And yet, unless we change the patterns around us, it's very hard to change our one specific behavior. Behavior is part of a broader ecosystem. Fourth is you can't grow yourself into profits. If you're thinking that, 2 years from now, I'll just be profitable by working hard or getting that really big account, think again. And last is create ways in which you get instant feedback. So with that, I will pause and let me see if you guys have any questions, thoughts, reactions. Again, as you pose your questions, hopefully you'll have a few questions. You should have in front of you a handful of documents. I took some of the tools that I grabbed from Michael's website. Again, you can go to that website and you can find those templates directly. Two, you can buy the print book. I actually really enjoyed the audiobook because he actually does he does his own reading, and I thought it was really it's entertaining. It's practical. It's entertaining. It's humorous. So it's actually, while it's a business management book, it's actually fairly entertaining read. So try that. And then hopefully as we do our Q&A, please take a couple of minutes to fill out your survey results. We could really use your feedback. Let us know. Was this conversation helpful? Did you find any value in it? Was there anything new here? And if you didn't like something, tell us how we can make it better. We strive for a 10 out of 10 every time. But tell us how to get there. So with that, I'll shut up and we'll go. Let me start with Salem. So Salem team, thoughts, reactions, feedback from you in terms of what we just talked about? Please, I hope you guys have at least one question because we talked about too much not to have a single question.
Rashid, does this author have like other books or any kind of newsletter or beyond just a book? Or
Yeah. I think Michael's written 4 or 5 books. So certainly you can go on the website and you can find some of those books. And yes, he also does have a newsletter that you can sign up for. That's really helpful. I've read a fair number of business management books in my life, and I have to say this book in particular I found extremely practical and helpful. So especially as I look at some of the folks that are in the room, Sally as an economic developer and now in Salem, you should get to know this book a little bit, because you will find as you're getting around the community that there's a lot of folks that need this guidance. Chamber leaders, I'm looking at Tanya and Tabitha, Casey and Marshfield. This is just the most powerful and simple tools that will help literally every single member in your community, those that are willing to sort of look at these issues. So anyways, hopefully that's helpful. Good question, Ray. Any other questions from Salem? Sally, what do you think? As an economic developer, what's your reactions to what we've talked about?
Well, basic information to help folks understand their business better is critical. And I agree with some of the things you said, that's something that is surprisingly missing, that sometimes folks just need some very basic information about how to look at it differently.
Yeah. Good. Great. Thanks, Sally. Let's go to Buffalo. Thoughts, Buffalo?
We don't really have any questions, but it is really good information. And I think this envelope concept for business is really kind of good way to look at things. And I think everybody really enjoyed the presentation. So thank you.
Excellent. Thank you. And let me ask you this, Tanya. The folks in Buffalo, I'm just curious, based on what you heard today, do you think there's something that you individually have something you can take back and apply to your business? So that's question A. Or B, interesting stuff. We can sort of, I don't know if there's something in it for me right now. Where do you land?
I have two business owners here in the room, and they both, I think, said yes, they could definitely apply this to their business.
Okay, good. Thanks for that feedback. Casey Marshfield, any thoughts, reactions?
Hello. Yeah. I think it was great that you talked about small business owners paying themselves and how to figure out what their salary should be to make sure that they are getting paid. A lot of times, I know those business owners that I work for that were small business owners, that would be like the last thing on their mind, but you really need to make sure you think of that when you're setting your expenses. So. Yeah.
And Casey, something something good for you to know. Scott, I'm blanking on Scott's last name. Pardon me?
Jones.
Scott Jones, right? Scott Jones. I'd spoken to Scott Jones, who's a small business owner, actually mid-sized business owner in Marshfield, and he actually applied this to his business, and he was. And now Scott's an incredibly smart guy. He runs a technology business. And I had assumed that, this would be sort of second nature, but I am really amazed at how valuable this insight is for small business owners. And I'm kind of looking around the room, and I know there's a banker there, there's chamber representation, economic development representation. I would, if I may request all of you, do this after our session's done. I'm going to wrap this up, and this recording will be available on business911.org, and I will send you guys links to it. If you could, please share this with your local community businesses. If you have a newsletter or any other forum, personal, social, professional, do share this link. This I'm telling you, this information is absolute gold. Just because it's powerful and it's easy to implement. And it actually, what I personally have found is that it takes a very, very complicated subject and makes it so that you can actually work with it. And the amount of stress, I can literally feel stress from right here, just kind of evaporate as I get to understand, okay, where's my money sitting? How much money do I have? What don't I have? And rather than it being a mystery. So anyways, thank you so much for your feedback. I really appreciate you guys participating. And please feel free to, give us your feedbacks and thoughts. Thank you. We'll wrap it up now. Take care.
Thanks for sharing.